All right, so today I'm going to talk about an introduction to credit. Credit is very important, especially at this time of our lives. It's time to go ahead and get that started, get that set up for all the life obstacles we're going to face in the future that require smart financial decisions. So what exactly is credit? According to Experian, credit is the ability to borrow money or access goods and services with the understanding that you will pay later. So basically, this is just the ability to receive something of value that you're promising that you're going to be paying back at a later date. The importance of credit. It demonstrates your financial responsibility. This is usually shown through a credit score. And this has a lot of implications for interest rates that you get at banks, interest rates that you get on loans, things that you want to purchase like cars, a house. It allows you to pay for something that you may not necessarily be able to afford right now. When we make purchases with credit, we do want to make sure that these are purchases that we know that we're going to have the income to pay back at a future date. But sometimes there are those emergency type situations where we really have no choice but to use funds right now. And your credit history and credit health may be used in many important financial events throughout your life. Going back to what we said about the car, the house, this can impact your living situation in some cases. All right, now let's talk about some of the advantages and disadvantages of credit cards. As for advantages, it's very convenient. It's this, not cash, but funds that you can access immediately that you're not paying immediately. So it allows for a lot of goods that you want to purchase but don't necessarily have every bit of the funds right now, just something you can work towards. There's security from fraudulent charges. It's backed by federal law that they protect you from unauthorized charges, but I'll talk more about that later. And there are reward programs such as cash back for certain credit card programs that incentivizes you to pay for things, but at the same time you're getting small rewards incrementally that can really be useful later. And these are temporary funds, funds that you're using right now that you're eventually paying later. As for disadvantages, it's very easy to start overspending and lose track of your spending. In fact, a ton of Americans are in debt, mostly due to credit cards. You can get high interest rates on your outstanding balances for your credit cards. So if you're not paying the full amount at the end of the month when you get your credit card bill, you're going to have interest rates on what you still owe. And these are going to be exorbitantly high because that's how these companies make their money. You are foregoing your future income. So because you're not paying for it now, obviously that means you're going to be paying for it later. And this, coupled with getting off track with how much you've been spending, can sometimes lead to making a lot of purchases or very big purchases with a credit card that can come back to bite you later, especially if you're not getting as much income as you expected to for that month, for that time period. So yeah, they can definitely be dangerous. All right, now let's specifically talk about credit card security. The federal law limits the amount of liability that you're going to face when someone uses unauthorized transactions with your credit card. But to be fully protected, you must report your credit card loss before unauthorized charges are made. And this actually doesn't apply in the case where someone just gets your credit card number. If someone gets your credit card number, that loss isn't technically on you. So in those instances, you're not faulted for any charges. You're not required to pay anything, even if they've already started making purchases on your account. But let's talk about some of the specifics. These are all the liability standards that are listed by the Electronic Fund Transfer Act. If you are able to report a lost credit card, or if it's your credit card number, before any unauthorized transactions are made, you are liable to pay $0 from those transactions. And if it is within 2 business days, but unauthorized transactions have gone through, you are required to pay up to $50 maximum on those transactions, but anything after that is covered by the federal law. If you realize between 2 business days and 60 calendar days in which you've received your credit card statement, you're actually going to be liable up to $500 for those unauthorized transactions. And the big reason for such a large increase is because at that point, once you've already received the statement knowing that your card is lost, you're sort of allowing these unauthorized charges to happen, so that's sort of the thinking behind this. And if you wait longer than this 60-day period, calendar day period after you've received your statement, you're actually going to be liable to all payments that were made unauthorized by you. So it's definitely something that you have to stay on top of. It's really important to keep track of what's going on with your credit account at all times. It's something that you should really be informed on if you want strong financial health and you don't want unauthorized transactions to ruin your credit score. All right, now let's talk about why building credit is so important. Mortgage rates. So when you're buying a home, typically you have to put money down on this home, and there's going to be an interest rate that you're paying every single year, sometimes every month over the course of many, many years. And this can really be a problem when you have bad credit score. Many times they won't even let you get a, could you go ahead and hit the, it's just, anyways, sorry. So with mortgage rates, if you don't have a good credit score, there's a solid chance you're not even going to get the loan to get a house. And typically when you have bad credit score and you want to get large loans, especially in the case of like cars or houses, you're probably going to have to secure that loan with collateral instead of just your credit, which can, and if you're unable to make those payments, you're going to lose something of significant value. We have car loans, bank loans, the interest rates on those. You know, you can, if you want to get more money back at the end of the year in certain savings accounts and things like that, they want to be able to know that you have ability to pay back that money and you're going to be a preferred customer to them. Some of your insurance rate premiums are determined by the credit score that you have. Prospective employment, a lot of people don't know this, but prospective employers can actually look at your credit reports and get an idea of your credit history, debts that you have and things like that. And so in many situations, your employment could be on the line. That could be the decision that they make when they're determining whether or not to hire you. Apartment situation, and what I meant by this is landlords can take a look at your credit score and they can determine whether or not they want you to even be a tenant at their location. Because if they don't think that you have a strong financial ability to pay back things that you borrow, they're not really going to trust you to be making those rent payments that you've signed up through that contract. They can also use your credit score and credit health to determine the security deposit size that they're going to make you pay towards the beginning. And these can be a lot higher for people with bad credit scores, of course. And now I'm going to give you guys tips for building credit. So first we have get a secured credit card. And this is probably one of the first steps that you're going to do if you want to build credit and you're just now starting. Starting with a card and not making the most transactions on it, just maybe things that you like absolutely know that you're going to need every month and you can keep it around a solid small payment. This is really going to help you get in the habit of paying off that amount at the end of every month and making sure it's not so high that you're not foregoing all of your income or you're not actually spending more than you're making. You can have a cosigner on loans or other credit-based finances, and what this sort of does is on those loans that you aren't able to make on your own because you don't have established credit or you have bad credit. This allows for something like a parent or guardian who already has established credit to co-sign, and if you default on anything, they're going to be the ones who are required to make up those funds. And this can be a really good way to get your foot in the door on credit opportunities, so long as you know that you have the ability to pay for these things and you're not going to be messing with the person that's co-signing with you. Using your credit card for fixed payments only, I sort of talked about this, but things like if you know that you're going to spend $30 on gas every month, maybe that's all you want to start out with because that's all you know that you can pay for every month for as long as you know. Just having a fixed amount that you know every month that you're planning for, that you know I'm going to spend this much at the end of this month, and I'm going to go ahead and build that towards my credit. That's going to help you significantly as opposed to someone who just uses debit cards or cash. And becoming an authorized user, this sort of allows someone with established credit, like a parent or guardian, to sign you as not really a beneficiary, but it sort of legally states that you're a part of their credit history, and gives you credit for the credit transactions that they've been making, which can be incredibly useful, but that is a big responsibility. How you can see your credit report. You are entitled to receive a credit report from all 3 credit reporting agencies once every 12 months from each of them. So you could order 3 at once, 1 from each all at the same time, or you could try and divide that up throughout the year so you get a better idea of your credit health throughout that year. Those agencies are Equifax, Experian, and TransUnion. What is a good credit score? So there are 2 types of credit scores that are popular, but the FICO score is what's most popularly used by lenders, so that's what I'm going to be going off of here. And as you can see, these are the different levels. Typically, if you're over 800, that's something that's pretty rare for most Americans, and that's sort of where you're going to be in those preferred customer brackets for banks and things like that. And I would say if you're around fair to very poor, you can either expect to not be receiving many of those loans, and if you are, you can expect to be putting up significant collateral or just facing exorbitantly high interest rates. All right, do y'all have any questions for me? Yes.
What age should you get a credit card?
I would say as soon as you turn 18, as soon as you're able to. What I sort of did is, knowing that I was going into college, I got a college card from a bank that had cashback opportunities, and my parents actually co-signed on that. Excuse me. And so what that allowed is for me to make those fixed payments that I was talking about earlier on things like gas and groceries, where I know that I'm only going to be spending this much amount every month. And those were things that my parents decided, we're going to go ahead and provide that for them anyways, so might as well build my credit for that. So that was my plan. So yeah, I definitely think it's something you need to start as soon as you can. Anything else? Yes.
Is there like a rule of thumb of how much you should spend on the credit card?
How much you should spend? Well, there are different caps depending on the type of credit card you get. I think especially with like college cards and things like that, a lot of the times they're going to set your maximum, your monthly spending maximum at somewhere around $1,000 every month, and it's just to make sure you don't go overboard with your expenditures. But I would definitely say, if you're just starting and you can't really rely on unforeseen payments, then it's probably good to just stick with whatever you know that you have to pay for and planning for that every single month. Any other questions? Awesome. Well, thank you all. and not all of my citations are showing up. Sadly, I was trying to give credit where credit was due. So my bad on that. But all the credit reporting information I got from the US government website on credit reports for credit card security. I got that from the FTC, which is the Federal Trade Commission. As for what credit was, I got that information from Experian. Don't really have it up there, so that's why I'm sort of fishing my brain right now. Sorry about that. And then I also got the information on what is a good credit score from Experian, which is, as you may remember, one of the 3 main branches. All right, thank you.